artificial intelligence stocks are the best performing stocks in the market in 2024. The good news is that there's still value to be had in this industry. In other words, I don't think it's too late to buy some of these most popular AI stocks, especially the three I'm going to mention in this video. That's right, I'm going to share with you three spectacular AI stocks you can still buy right now that I think are undervalued investments. So let me share with you what these three AI stocks are, why I like them so much, and describe the reasons why they're good investments for long-term investors. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the three stocks I'm recommending today, three excellent AI stocks, are NVIDIA, Meta Platforms, and Alphabet. These are three of the largest tech stocks in the markets today. These three companies have delivered excellent revenue increases over the last decade, as I can see here. In the last 10 years, Alphabet has increased its revenue to $340 billion. That's up from less than $100 billion in 2015. Similarly, Meta Platforms has increased its revenue all the way to $156 billion, up from less than $10 billion in 2015. And of course, what else can be said about NVIDIA? Absolutely explosive revenue growth here just in the last 2 years, up to $113 billion. Ironically enough, Meta Platforms and Alphabet are two of NVIDIA's largest customers right now, buying tens of billions of dollars of its accelerated GPU products. Perhaps more impressively and more importantly, and the reason why I like these investments more than the revenue growth, is the profitability. It's easy to grow revenue, right? You can offer an excellent product for a very low price and your revenues will explode. But if you're not generating profits, you're not going to be in business very long. These three companies generate excellent profits, especially NVIDIA. 62.7% operating profit margin in the trailing 12 months. That's absolutely phenomenal. There's only one company that I follow that has a higher operating profit margin than this, and that is Visa. Every other company that I follow is below this 62.71% operating profit margin. So not only are NVIDIA's sales exploding, but their profit margins are also exploding. Meta Platforms operating profit margin of 40% is really, really strong. It's just when you compare it to a company like NVIDIA, it makes Meta Platforms profit margins look mediocre. I assure you they are not. They are in the excellent category as well. Same story with Alphabet. 31% operating profit margin is really good. Maybe not in the excellent category, which I deem at around 40% and above. It's still really good category in 31%, especially when you have revenues of over $100 billion. These are all companies generating strong profit margins at very nice revenue growth rates, and they operate in markets that are exploding higher. For instance, the artificial intelligence market is forecast to surpass $1.5 trillion by the year 2030, according to some estimates. Similarly, the markets that Meta and Alphabet operate in, the advertising market specifically, are estimated to be around $1 trillion in total annual spending in 2024 alone. And those rates are expected to increase over the next decade. And I feel the advertising market is on a perpetually increasing trajectory. Now, there might be volatility in between where you have years where the ad market declines during a recession, let's say. But if you forecast the next 10 years, I suspect ad spending will be higher than the previous 10 years, and the 10 years after that will be higher than the previous 10 years before that, and on and on and on into perpetuity. I would forecast ad revenues increasing. Now, the other thing I like about these three AI stocks is that their valuations are relatively undervalued. NVIDIA is trading at a forward price to earnings of just 31, even though I shared with you those excellent prospects. Revenue is soaring, profits are soaring. It's still trading at a relatively cheap price of 31. And same is true for Meta and Alphabet, trading at forward price to earnings of 22 and 19, respectively. So these companies they're not overvalued in terms of market participants right now when compared to the market overall. The S&P 500 is trading at a forward price to earnings right around 20. So Meta and Alphabet are trading right around the average valuation of the stock in the S&P 500, whereas Nvidia at 31 is trading at only slightly above the average valuation. Looking ahead, the earnings per share forecasts for these companies are also solid, over double-digit earnings per share expectations for Meta and Google in 2025. In 2026, over double-digit expected as well in earnings per share for Meta and Google, and then for Nvidia, of course, exceeding those expectations at 46%. And then in 2027, Nvidia expected 25% earnings per share growth, with Meta and Google again in the double digits. So these companies are forecast to continue increasing their earnings per share over the next several years. It's not just what they've done in the past, but their prospects for the future also look bright. Now, I've also done discounted cash flow valuations of these companies, and according to those valuations, they also look undervalued. Alphabet, I have at intrinsic value per share of $238, and the current market price is only $167. Meta Platforms, according to my calculations, my discounted cash flow valuations, its intrinsic value per share is $590, and its current market price is $565. Again, undervalued based on my calculations. And finally, Nvidia, my discounted cash flow valuation for Nvidia presents a $314 intrinsic value per share compared to the current market price of just $136 per share. So even if whether you're looking at the forward PE multiples or if you're looking at a discounted cash flow valuation, it all looks undervalued to me. So these are three excellent AI stocks for investors looking for undervalued growth stocks you can still buy. These are three excellent choices in a market where some bubble activity is happening, right? Some stocks are becoming overvalued, and I've talked about that on my channel, especially those related to artificial intelligence. You can see some bubbles forming. I don't think it's the case with these three. I think these three remain undervalued and remain a good opportunity for long-term investors. By long-term, I mean 5 years or longer, 10 years or longer here. So if you're buying these stocks today, I estimate that over the next 10, 20, 30 years, your wealth will increase from the time you make these investments. Of course, this is for entertainment purposes only. Conduct more due diligence before making decisions on any of these stocks. I have dozens and dozens and dozens of videos on all three of these companies on my channel. I suggest you to watch more of those before making a decision on investing in any of these three companies. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.